Welcome to the latest Full FX video. Ahead of the Full FX London on November the 8th at the Leonardo City in Cooper's Row, I'm delighted to be joined by one of our sponsors, Brian Nolan, who is co-founder and CEO of Finteum. Brian, it's great to talk to you.
Great to talk to you too, Colin. Thanks very much for having us. Really looking forward to London on the 8th of November.
Yeah, hopefully we'll. Well, I've never looked forward to more post-trade discussions at any time in my life. That's all I can say.
Yeah, it's definitely on people's mind.
Oh, that's for sure. Yeah. So could you, and I should actually say to the viewers, I apologize for my light. I'm in a hotel room with the worst lighting in the world, but we'll deal with this one. Brian, what I'd like to do is kick off with, obviously Finteum's a fairly young company. So maybe if you can introduce yourself and the company to our viewers in terms of, what it is actually you're sort of set up to do.
Yeah, sure. Finteum is a platform for intraday FX swaps on T+0 and T+1 between banks. We're going live very soon with UBS, NatWest, and other banks. And we also cover intraday repo, but I'll focus on FX.
Yep.
I come from bank treasury in liquidity. I was in the front office and in liquidity governance in UBS and Bank of Ireland for 8 years. Intraday liquidity was one of my topics, and I felt there should be interbank markets to get funding for a few hours rather than just overnight FX swaps or overnight repo. So we created Finteum, and now we're a team of 20 people. We're based in London. We're independent. We're backed by venture capital. I can quickly go over how it works. So banks use our platform when they want money in a currency intraday on T+0 or on T+1.
Yeah.
And when they do intraday FX swaps, they can save tens of millions per year by reducing the amount of HQLA they need to hold for intraday liquidity. And then additionally, when they have an excess of dollars or euro or sterling or CAD for a few hours, they can sell it in the market and generate revenue of maybe 1 or 2 million a year. And then our platform simplifies and de-risks the life cycle. So for example, trades are ISDA compliant, but they're automatically confirmed. The banks don't need to send MT300 confirmations, and they use our platform to coordinate internally on how much money can be sold intraday or how much money does the bank need intraday for which hours and which currencies. Then we have the front office negotiation with counterparties on forward points, implied yield. They agree the near leg time, not the near leg date, but the near leg time, and the far leg time. And we have execution, we have RFQ, we have a club with a hard match, which is a bit different.
Okay.
And we also cover post-trade actions in the platform, like rolls, cancellations, early maturities, and we make it easy to do reg reporting. We have fix APIs, all the good stuff.
Yeah. So obviously you've been working on this project for quite some time. Your time at UBS and Bank of Ireland would definitely have had you focusing on intraday liquidity, I'm sure. So the T+1 issue that we're going to talk about on November the 8th has kind of fallen into your lap a little bit, hasn't it? So how do you view what's the discussion around T+1? Sorry.
Yeah, it's the topic of the hour, and I'll say it's not our main focus. The move, let's say DTCC and the Canadian move from T+2 to T+1, but I do believe our platform can help, and certainly with the resulting funding positions that banks will have. But how I view the issue, if you read the GFMA and the AFME papers and watch the SIBOS panels and the Full FX panel that's coming up and all of this, the urgent issue is that the buy side needs to implement automation in the next few months. And a few months ago, 60% of them hadn't started. In a few months from now, they need to be able to automatically allocate and affirm the trades by T0 at 9 p.m. Eastern. And if they need to do a spot FX for value T+1 to fund that trade, they also need to automate the execution of that spot FX trade as well. Because they only have a few hours to affirm everything. And in May, I expect when it goes live at the end of May, we're going to see more fails. There are going to be exceptions to handle. So to alleviate, that, which I see as the urgent issue for the industry, it seems like for dealer to client spot FX, there are existing tools, or there are slight modifications being made to tools. So like a lot of the custodians like Citi, BNP, BNY Mellon, and others have the capabilities for automated dealer to client execution, auto FX. You have State Street now has Street FX that integrates directly with DTCC. BNP Securities highlighted 20% of their spot FX is already on T+0. So for those APAC clients that need to do T0 spot FX, I guess they're saying, a lot of it is T0 already. And meanwhile, CLS is saying that, only 1% of the trades might miss the cutoff. So it does seem like to some people, the FX aspects of T+1 are not a huge deal. And the FX market doesn't need new tools for dealer to client. I think a lot of the custodians are positioning it that there are tools there, just the buy side needs to adopt it. But where we come in, I think the dealer to dealer side hasn't really been discussed. And the focus has mainly been on like dealer to client. How do we do FX to fund a spot securities transaction on T+1? But if a lot of spot FX moves to T+0, then I think that dealers, they'll be able to internalize some of that flow, but there will be resulting funding needs from T+0 spot FX, and also from the increased fails that we expect to see in security settlements. So what we expect to see is that dealers will need interbank funding markets that will be able to help them to react to those T+0 changes in their funding position. And I think I wouldn't say it's completely fallen into our lap, but I think that's where the Finteum platform is going to help. It's going to be helpful for interbank intraday FX swaps or interbank overnight FX swaps that work more efficiently than today, and help them to deal with those resulting funding positions.
And obviously, we'll go into this in more detail in the panel. This is a good preview actually, because all the things I want to talk about, and I do have a few observations around. It's only 1% here, and it's not that big here. As someone who's based in Asia, I can say there's a lot of people worried about it. But what I'd just like to close out with, Brian, if I could, as I say, we'll definitely go into this in more depth on November the 8th. But what's fascinated me with your model from the start has always been, so how does the kind of credit and settlement piece of this work? Because obviously it's such, you mentioned it earlier, it's what time do you settle, not or do you mature, not what date. So how does the credit and settlement mechanism work?
Yeah, I can mention credit first. So I said, we have a hard match on our club. That's because the credit risk limits are built into our platform, so we can use risk limits to make sure that trades can immediately settle, that you don't have a soft match that can then get kicked back. And then settlement itself, we don't settle the trades. For settlement of intraday FX swaps, initially trade legs are going to settle at pre-agreed times on T+0 or T+1 in CHAPS, Fedwire, Target2, RTGS systems.
Okay, so using the existing infrastructure.
Exactly, initially, right? So if two banks agree to a trade from T+1 at 10 a.m. until 2 p.m. on T+1, then the two banks have a 30-minute window for each leg, so from 10 to 10:30, to settle the near leg in CHAPS, Fedwire, T2.
Right.
Otherwise, they pay late fees to each other.
Yeah.
But in the near future, we expect that those trades will settle PVP in systems like Finality or Baton. Alex would be on our panel, or others. And we did a test with Finality last year. We negotiated, executed, confirmed an FX swap, and we settled the near leg PVP and then confirmed back that it had settled all within about 5 seconds. So that's the future. People are worried about hours to settle these T+1 trades, but the future is being able to settle when you urgently need money in a given currency, that you're able to settle a trade PVP within seconds is the future.
Yeah. Well, all I can say, Brian, is as an old trader, I've never been more interested in talking to people about the post trade because I actually think what you're doing here is actually you're actually potentially changing how the trading process works as well. Because one thing I do want to talk about on November the 8th in our panel session is how this does loop back to the front office, because I think that's going to be the important thing. So
Yeah.
you can catch Brian is on the second leg of our T+1 session, which starts at 10:55 on the 8th. Brian, I look forward to seeing you then. Thank you very much for your time today.
Thank you very much for having me, Colin. Looking forward to the 8th.
Great. And thanks everyone for watching, and we'll be back in soon. Thanks a lot.